Will the bubble burst in real estate in 2025? I mean, ever since COVID in 2020, 2019, real estate prices have gone through the roof, which has made it more difficult for you to afford the down payment for a house. Not only that, mortgage rates have also gone higher. I mean, during COVID, interest rates were at 2%, sometimes as low as 1.5%, I believe, or even as low as 3%. Now they've doubled. Now interest rates are 6%, 6.5%, 7%, which makes the monthly mortgage payments higher. On top of that, you got to pay for taxes and insurance. I mean, you can't afford that. I get it. So what if I were to tell you that the bubble bursting has no effect on whether or not you can afford a house? I know that sounds counterintuitive, but this is the reality. I mean, look at it. We've been dealing with economic crises for a very long time. I mean, ever since COVID, home prices and the economy tanked. I mean, just recently with Donald Trump saying that he's going to have tariffs against other countries, that has tanked the economy momentarily. I mean, think about what happened in 2007, 2008 with the financial collapse. Home prices went through the roof. I mean, they had the Too Big to Fail Act where the government had to step in and give money to all these companies who was not doing things great financially. Even before that, I remember my grandfather telling me in the 1970s there was an oil crisis where he had his retail shop in a mall in Chicago and people couldn't travel back and forth to the mall because oil prices were $11 a gallon. I mean, so throughout history, there have been at least one economic collapse over every 10 years. So what does this tell you? It tells you that it doesn't matter whether or not the bubble's going to burst in real estate in 2025. And here's why. Because it's all about value. And it's all about the price you pay for what you're going to get. And this is the key component here. So in this video, we're going to discuss just that, how to obtain value in looking for a house, which can also help you to afford any house you get into. But before we get into it, hit the subscribe button to get wonderful content just like this. So without further ado, let's get to it. But before we get into it, I just want to dispel the belief that you cannot become a millionaire even if the bubble bursts. I mean, Warren Buffett says that when times are tough, when the economy is not doing well, that's the time to attack. That is the time to be aggressive. That is the time to buy. So, because home prices are low. I was talking to my friend the other day, and he was telling me how there was a building that was for sale during the time of COVID, when prices had gone down. Because he had a lot of cash on hand, he was able to buy a property that was worth $200 million at that time. But he bought it for $100 million. Now, that's a lot of money. That's a big number. But think about the profit he made 5 years later today. He has made a whopping $100 million on that deal. But because people were in a panic and they did not do what they were supposed to do, they did not do well there. Number one, what is your budget for buying real estate? Your budget is critically important because it allows you to see where you're at in the marketplace. Now, let's say, number one, you got to figure out whether or not you're going to buy real estate through FHA, which is Federal Housing Administration, whereby the government can give you a loan whereby the deposit amount is lower than the traditional 5% or 10%. FHA allows you to put down a deposit of 3.5%, right? So and also your credit score can be 500 or better. Right, long as it's 500 or better, you will get approved through FHA. The second question is, are you going to buy through conventional? Right, which means that you just got to put down 5% or 10% of a house, and your credit score got to be over 680. Right. The third way is, are you going to buy real estate through an investment or as an investment, meaning that you're going to put down 20% of the purchase price of a house and you're going to renovate the house and resell the house. Once you figure out which way you want to buy, the next step is to figure out value. Right. What is the value that you're going to attribute to that house? Let's say you get a house. I'm gonna tell you a quick thing here. Let's say you get a house. The house costs $100,000. If you buy the house and sell the house, it's going to appraise for $100,000. What price would you pay for the house? You tell me. Are you going to pay $100,000 for the house? No, you're going to pay $80,000 for the house, $90,000 for the house. Anything below 100 grand, that's the price you're going to pay for a house. Now, when you think about construction or rehab, what price are you going to pay for that? Well, let's say the rehab is $10,000. You tell me what price you're going to pay for the house. You're going to subtract $10,000 from $80,000, let's say. So now the offer you're going to submit on that house is $70,000. Now, when it comes to your budgeting, you got to see whether or not you can afford that. Because if you go FHA, you got to put 3.5% down, which is about 3.5% of $70,000 is what? It's $2,100. I mean, you should be able to afford that. If you go conventional, you got to put down 5% of $70,000, right? What is that? That's $3,500 approximately. If you go hard money, or if you're an investor, you got to put down 20% of the $70,000, right? So what is that? That is $21,000. Okay? No, I'm sorry. That's $14,000. So you got to put down $14,000. So you got to see where you fit in on that spectrum. Okay? But the value doesn't change. The value, you see what's happening here? The value of $70,000 doesn't change. Just depends on what you can afford based on what your budget is and based on what you qualify for, right? So this is what you got to understand. You got to understand that it's all based on what you can afford. Number one, what is your budget, right? You can talk to a FHA banker, you can talk to a conventional banker, you can talk to a hard money lender, okay? It's a lot of them out there. Once you figure out what you qualify for and what you can afford based on how much money you have saved, based on your current credit score, based on your current economic situation, right? You go out there in the marketplace and you look for value, right? You look for value. You're trying to find discounted homes. You're trying to find homes below market value that you can buy. Now, you may say to yourself, man, it's not a lot of homes out there like that. There's always homes out there like that. Because even in the previous example, with a guy that happened with the story about the guy in 2020, now, I mean, that's a larger deal whereby the seller sold this multi-unit property in Manhattan for $100 million, which was $100 million lower than what it was actually worth. But because he was stressed out, he could not afford to continue on owning that property. So he sold it below market value. That is what happens all day with single family homes, duplexes, triplexes, fourplexes. I mean, it just always happens. People do not economically do well with the homes they own. So because of that, they sell them at a discount. And this is where you come in at, right? So just understand that there's always deals like that. Submit as many offers as you possibly can, and a deal will fall in your lap, okay? So again, budgeting, make sure you figure out what you can afford. And then number two, you're always looking for value. And I think that wraps it up right there. Look, if you like this video, check out my other video right here. We're going to dive deeper into topics about real estate. Until the next time, peace.